Assalamualaikum warahmatullahi wabarakatuh. Today we will analyze a financial statement of Malaysian company. We will present the performance of individuals company based on information from financial statement and annual report. We will present the analyzed profit and loss account and balance sheet for the past 3 years for each company. In this presentation, we choose 3 companies of the same industry, which is consumer product and service, which is Apollo Food Holdings Berhad, Oriental Food Industry Holding Berhad, and Kawan Food Berhad. And we will analyze and evaluations of the current and prospective profitability, liquidity, and financial stability, and so on. My name is Nur Nada binti Ash'ari, IIE 180020, and with me my friend who will present to Quratul Ainabila binti Rosli, IIE 180028, and Ahmad Zaidi bin Shahlan, IIE 180002. First company, Apollo Food Holdings Berhad. Apollo Food Holding Berhad is a holding company which is engaged in the provision of management service to subsidiaries. The company is operating in 2 segments, in investment, holding, and manufacturing. In manufacturing, Apollo Food Holding Berhad is distributing in compound chocolate, chocolate confectionery products, and layer cakes based in Malaysia. Apollo product is mainly divided into 2 main categories, which are chocolate wafer product and layer cake like chocolate layer cake and Swiss roll product. As a leading manufacturer of the chocolate confectionery product and layer cake industry in Malaysia, the Apollo products are distributed in Malaysia and other overseas markets, which is Singapore, Thailand, Indonesia, and many more. Its subsidiaries include Apollo Food Industry Sdn Berhad, which is engaged in manufacture and trading, and Hub Food Industry Sdn Berhad, which is an investment holding company of Apollo Food Holding Berhad. The first I would like analyze is liquidity ratio, which is the first current ratio. The current ratio is a liquidity ratio that is calculated to measure a firm's ability to pay short-term obligation or those due within 1 year. It tells investors and analysts how a company can maximize the current asset on its balance sheet to satisfy its current debts and other payables. To calculate the current ratio, analysts compare a company's current asset to its current liability. We could see that Apollo Food Holding Berhad has good liquidity in 2018, which is 2 years later. We can see that in 2017 and 2019, there is low liquidity due to higher liability than in 2018. In 2018, the addition of positive liquidity vibrations increased by 2.27, and in 2019 decreased by 2.15. This data show that Apollo Food Holding Berhad has the financial resource to remain solvent in short term. Second is quick ratio. The quick ratio indicates a company's capacity to pay its current liability without needing to sell its inventory or get additional financing. The quick ratio is considered a more conservative measure than the current ratio, which includes all current assets as coverage for current liability. The higher the ratio result, the better a company liquidity and financial company. The lower the ratio result, the more likely the company will struggle with paying debts. In Apollo Food Holding Berhad, we saw that in 2018, the quick ratio experienced an increase compared to the last year 2018 from 14.04 times to 15.99 times. Meanwhile, the quick ratio of Apollo Food Holding Berhad in 2019 decreased again to 14.11 times. This data show the ability of Apollo Food Holding Berhad to pay their short-term debts mostly equal to their sale. Next, the analysis of activity ratio. Activity ratio is to measure a firm's ability to convert different accounts within its balance sheet into cash or sale. Activity ratio measures the relative efficiency of a firm based on its use of its assets, leverage, or other similar balance sheet items, and are important in determining whether a company management is doing a good enough job of generating revenue and cash from its resources. Companies typically try to turn their product into cash or sale as fast as possible because this will generally lead to the higher revenue. The first, inventory turnover. Inventory turnover is to measure how many times in a year a company sells its inventory. It is calculate a sale divided by inventory. As calculate, we can see that the graph show a downtrend. In 2070, Apollo Food Industry Berhad sold inventory 13.80 times, while in 2018, Apollo Food Holding Berhad sold inventory 12.80 times, and in 2019, Apollo Food Holding Berhad sold inventory 12.10 times. As a conclusion, this downtrend show not good because a low turnover implies weak sale and possibly excess inventory, also known as overstock. It may indicate a problem with the goods being offered for sale or be result of too little marketing. Next, analyze about average collection periods. Account receivable are evaluated by the average collection period ratio. It is calculated by dividing account receivable by the average daily sale to find how many days sales are tied up in receivable. Thus, the average collection period represents the average length of time the firm must wait after making a sale before receive cash. So, in 2017, the average collection period of Apollo Food Holding Berhad is 66 days and 57 days in 2018, while in 2019, the average collection period of Apollo Food Holding Berhad is 57 days. For average collection period, Apollo Food Holding Berhad had an improvement, which they were able to collect the receivable shorter than previous year, which is in 2018 and 19, Apollo Food Holding Berhad took 15.7 days, shorter than 66 days in 2017. As a conclusion, this data show that in 2017, 2018, and 2019 has shown improvement, but the average collection period exceeds 30 days. This means that Apollo Food Holding Berhad is not able to collect debts from customers in less than a month. Next, fixed asset turnover. The fixed asset turnover ratio is an efficiency ratio that measures how well a company uses its fixed asset to generate sales. It is calculated by dividing net sales by the net of property, plant, and equipment. A high ratio indicates that a company efficiently uses its fixed asset to generate sales, whereas a low ratio indicates that the firm does not efficiently use its fixed asset to generate sales. For Apollo Food Holding Berhad, we can see that the decrease from 2017 to 2018. This graph shows from 2.30 times in 2017 decreased to 8.85 times in 2018 and decreased again in 2019, which is 1.99 times. In conclusion, this is not good because this ratio will affect the investor and creditors. Apollo Food Holding Berhad was able to use its asset 0.28 times lower than last year, that is in 2017, and able to use 0.14 times higher than in 2018. Total asset turnover. Total asset turnover ratio is the ratio of total sale or revenue to average asset. This metric helps investors understand how effectively companies are using their asset to generate sale, and it is calculated by dividing sale by total asset. The higher the total asset turnover ratio, the better the company is performing, because the higher ratio implies that the company is generating more revenue per RM of asset. Based on the graph, we can see in the graph that the total asset turnover ratio decreased from 2018 to 2019. In 2018, the total asset turnover ratio of Apollo Food Holding Berhad is 0.70 times. In 2017, the total asset turnover ratio of Apollo Food Holding Berhad is 0.76 times, while in 2018 is 0.72 and 2019 is 0.71. In conclusion, Apollo Food Holding Berhad needs to use fixed assets more efficiently to generate sales and needs to increase inventory turnover. This is because the performance of Apollo Food Holding Berhad is in the activity ratio was quite bad in their management. That means Apollo Food Holding Berhad was not able to generate high profit, and their cash flow was clear and good. Next, the analyze about debt ratio. The debt ratio measure how much of a company operation come from debts instead of other form of financing, such as stock or personal saving. The debt ratio is one measure among many of company risks and the likelihood of default. It can be interpreted as the proportion of a company assets that are financed by debt. The higher the debt ratio, the more leveraged a company is, implying greater financial risk. First, debt ratio. The debt ratio is a financial ratio that measures the extent of company leverage. The debt ratio is defined as the ratio of total debts to total assets, expressed as a decimal or percentage. It can be interpreted as the proportion of a company assets that are financed by debt. The debt ratio measures the amount of average used by a company in terms of total debt to total asset. A debt ratio greater than 1.0 tells us that a company has more debt than asset. Meanwhile, a debt ratio of less than 1.0 indicates that a company has more asset than debts. As we can see in the graph, Apollo Food Holding Berhad is experiencing a decrease in percentage of debt ratio from 8.5% in 2017 to 7.6% in 2018, and increase again in 2019, which is 8%. Although it showed an increase in 2019 in this debt ratio, but it still does not exceed 100%. This indicates that the total asset exceeds the total debts. Next, time interest earned. A company's time interest earned indicates its ability to pay its debts. A better time interest earned number means a company has enough cash after paying its debt to continue to invest in the business. A result is a number that shows how many times a company could cover its interest charge with its pre-tax earnings. The formula for the times interest earned is calculated as earning before interest and tax divided by total interest expenses. As we can see in the graph, the times interest earned by Apollo Food Holding Berhad declined in 2018 and increased in 2019, which is 9.46 times in 2017, 7.13 times in 2018, and 9.75 times in 2019. The analysis showed the decreasing and increasing trend for Apollo Food Holdings Berhad. Apollo Food Holding Berhad showed a drastic decrease of 2.33 from 2018 to 2018. This means Apollo Food Holding Berhad still has enough cash flow to continue to invest in the business. As an investor, they would like to choose a company with a high ratio for the time interest earned because it gives more profit to them in order to expand the investor company. Next, the analysis of profitability ratio. Profitability ratio are arguably the most widely used ratio in investment analysis. This ratio shows how well a company can generate profits from its operations. This ratio measures the company's ability to earn an adequate returns. First, operating margin. Operating profit margin is a profitability or performance ratio that reflects the percentage of profit a company produces from its operation. Before subtracting tax and interest charges, operating profit margin measures how much profit a company makes on a dollar of sale after paying a variable cost of production such as wage and raw material, but before paying interest of debt. It is calculated by dividing a company operating income by its net sales. Based on the graph, it shows the downtrend of operating margin from 13% in 2017 to 0.9% in 2018 and increase again 14% in 2019. This means that Apollo Food Holding Berhad used the operating cost efficiently. Next, profit margins. The profit margin ratio communicates what percentage of a company's sales are left after all business expenses are paid and accounted for. Net profit margin is percentage of revenue remaining after all operating expenses, interest, tax, and preferred stock dividends has been deducted from a company total revenue. By comparing a company profit and sale, the profit margin ratio shows how well the company is managing its overall finance. The ratio is calculated by dividing net income by sale. Based on the graph show, Apollo Food Holding Berhad showed the downtrend of a profit margin from 8.54% in 2017 to 5.80% in 2018 and increase again 9.23% in 2019. This means profit that came from total sale in Apollo Food Holding Berhad shrink from 2017 to 2018 and increase again 3.43 from 2018 to 2019. Next, the basic earning power. The basic earning power ratio is a measure of a company's efficiency at producing earnings relative to its asset and a measure that calculates the earning power of a business before the effect of the business income tax and its financial leverage. Earning per share is computed by simply taking the company's preferred dividends out of net income and dividing the result by the average number of shares outstanding. And this shows the available per common share, that how much the investor can get per share. It is calculated by dividing earnings before interest and tax by total asset. As we saw in the graph, Apollo Food Holding Berhad showed the decrease in basic earning power ratio from 10% in 2017 to 6% in 2018 and increased again by 10% in 2019. Return on asset is an indicator of how profitable a company is relative to its total asset. ROA gives a manager, investor, or analyst an idea as to how efficient a company management is at using its asset to generate net income. Return on asset is displayed as a percentage. Higher return on asset indicate more asset efficiency. As we saw in the graph, Apollo Food Holding Berhad show the decrease of return on asset from 8.45% in 2018 to 4.20% in 2018 and increased back 0.54% in 2018. Return on equity is measure how the profitability of a corporation in relation to stockholder equity. It is calculated by dividing net income by shareholder equity. As we saw in the graph, Apollo Food Holding Berhad showed a decrease of return on equity from 7% in 2017 to 4.5% in 2018 and increased back 2.1% in 2019. Stockholders expect to earn a return on their money, and this ratio tells us well they are doing in accounting sense. Next, the analysis of market ratio. First, price per earning. The price per earnings ratio is the ratio for valuing a company that measures its current share price relative to its per share earnings. The price per earnings ratio is how much investors are willing to pay for one ringgit of earnings. Based on the graph, it shows an uptrend from 0.22 in 2017 and 0.29 in 2018 and decrease in 2019, which is 0.28. Price per book ratio. The ratio of a price per share to its book value gives another indication of how investors regard the company. Companies that are well regarded by investors, which mean low risk and high growth, have high MB ratio. MB ratio tells us how much investors are willing to pay for 1 ringgit of book value equity. Based on the graph, the market per book ratio of Apollo Food Holding is decreasing from 1.56 times in 2018 to 1.32 times in 2018 and 1.29 times in 2018. The analysis free of cash flow. Free of cash flow tell you how much cash a company have left over after paying operating expenses and maintaining its capital expenditure. In short, how much money it has left after paying the cost to run its business. Free of cash flow can be spent by a company however it seems fit, such as paying dividends to its shareholder or investing in the growth of the company. So in Apollo Food Holding Berhad, we can see the negative growth in free of cash flow from 2017 to 2018, which is 27 millions to 20 millions, and turned up in 2019, which is 29 millions.
Oriental Food Industry Holding Berhad, or called as name OFI, was incorporated on 8 June 1996 in Malaysia under the Companies Act 1965 as a public limited company. OFI was listed on the second board of Bursa Malaysia Securities Berhad in August 2000 and subsequently transferred to the main board of 13 October 2003. Oriental Food Industry Holding products can be divided into 5 broad categories, which is namely snack food, wafer, potato snacks, biscuits, and bakery products. Product brand names like Superring, Jacker, Rota, Zest, and Oriental itself are currently well-known brand names in Malaysia and over the globe. Next, we will see the current ratio of Oriental Food Industry Holding Berhad. In 2017, the current ratio is 2.73 times, but as we can see in the graph, it decreased to 2.12 times in 2018 and increased at 2.41 times in 2019. Next, we will discuss the quick ratio. The quick ratio measures the dollar number of liquid assets available for each ringgit of current liabilities. So, we can see that in 2017, the quick ratio of Oriental Food Industry Holding is 2.04 times and decreased in 2018 1.51 times. In 2019, it increased again 1.55 times. So we can see the highest quick ratio is in 2017, followed by 2019 and 2018. The inventory turnover of Oriental Food Industry Holding Berhad, we can see that in 2017, it is 9.87 times and increases a little bit to 9.89 times in 2018. But in 2019, the inventory turnover is decreases to 7.49 times. Next, we will discuss average collection period or DSO. Average collection period is a ratio that determines the time it takes from a firm to collect its receivable. So we can see that in 2017, it only took 70 days, but in 2018, unfortunately, Oriental Food Industry Holding Berhad takes 76 days, but it decreases to 63 days, so it is a positive growth in 2019. We go to fixed asset turnover. In 2017, Oriental Food Industry Holding Berhad is 1.93 times and increased in 2018 2.02 times and constant in 2019. Next, we will go to total asset turnover. In 2017, the total asset turnover for Oriental Food Industry Holding Berhad is 1.06 times and increased to 1.15 times in 2018. But unfortunately, it is decreased in 2019, which is to 1.12 times. Next, we will discuss about the debt ratio. Okay, debt ratio is used to measure the amount of company leverage. Higher ratio means increased leverage, and debt, therefore, it means high risk for the company. So we can see that in Oriental Food Industry Holding Berhad, in 2017, the debt ratio is 12%, increased to 22% in 2018. But in 2019, it decreased to 6.3% only. Next, we will go to time interest earned. In 2017, it is 43.5%, and then it decreased to 2018 27.14% and decreased again in 2019 17.96%. Next, we will go to profitability ratio. Okay, for the gross profit margin, Oriental Food Industry Holding Berhad, it shows decrease from 2017 to 2019, which are 22% to 20% and go to 18%. The operating profit margin is same as the gross profit margin, which is from the 2017 to 2019, shows decrease from 9.22% in 2017 to 6.65% in 2019. Next, we will go to net profit margin. In 2017, the net profit margin is 70%, but decreased to 2018 38%. But in 2019, it increased to 45%. Next, we will go to market ratio, which is earning per share. Okay, as you can see, the earning per share in 2017 is 75 cents and decreased to 46 cents in 2018. And in 2019, the earning per share is increased to 54 cents. Next, we will go to return on total asset. The return on total asset in 2017 is 0.75 times, but in 2018 it decreased to 0.44 times and increased in 2019, which is 0.51 times. Okay, for the return on total equity, we can see that in 2017 the total equity is the highest, which is 0.99 times and decreased to 0.59 times. But in 2019 it increased a little bit, which is 0.69 times. Next, we will go to the price per earning ratio. Okay, as we can see that in 2017 the price per earning ratio is only 0.13 times, and then it increased in 2018, which is 0.21 times, and decreased a little bit, which is 0.20 times. Next, we will discuss the market per book ratio. Okay, as we can see that in 2017, the market per book ratio for Oriental Food Industry Holding Berhad is 1.97, and then it decreased to 1.29 times in 2018 and still decreased to 1.01 times in 2019. Okay, and the last one is the free cash flow. As we can see, it increased to 2018 but decreased in 2019, which is 21 billion 46,439 ringgit 50 cents. So we can see that in 2019 that Oriental Food Industry Holding Berhad has less the cash of the money.
Kawan Food Berhad. Kawan Food Berhad is one of Malaysia's leading exporter and largest manufacturer of frozen Asian food delicious worldwide. 40 years ago, at a modest family-run business that made and sold homemade traditional pastries to local groceries and supermarkets. By mid-1980s, however, as the business was gaining a steady lead in the local market, there was inevitable need to expand beyond Malaysia's shores. Their founder had already using preservative and artificial ingredients that did not spoil easily, as they believed in providing everyone with only authentic and safe food of the highest quality. Okay, first, current ratio. Current ratio for Kawan Food Berhad in 2017 was 3.17 and increasing in 2018, 3.44, and in 2019 is 3.15. Okay, this means this company have a 3 times more in asset than liabilities, and also shows the company are able to pay their debt. And then for quick ratio, in 2017, 2.8, and remain maintain their quick ratio in 2018, 2.8, and decreasing 2019, that was 2.58. This shows in 2017 and 2018, the company has a 2.8 times of liquid asset available to cover each one of current liabilities. And then in 2019, the company has a 2.58 of liquid asset available to cover each one of current liabilities. Okay, inventory turnover. We can see in the graph shows go down in 2018 and go up a little bit in 2019. In 2017, Kawan Food sales inventory 12.9 times, while in 2018, Kawan Food sales inventory for 8.55 times, and in 2019, Kawan Food sales inventory 9 times. As a conclusion, this trend shows that good because a low turnover implies weak sales and possible excess inventory, also known as overstocking. It may indicate a problem with the good being offered for sale or being used for too little marketing. Deal sales outstanding. Okay, in 2017, deal sales outstanding of Kawan Food is 91 days and 69 days in 2018, while in 2019, deal sales outstanding of Kawan Food is 78 days. As concerned, this data shows that only in 2017 and 2018 around 3 months, and 2019 is around 2 months and a half. This means that Kawan Food is not able to collect debt from customers in less than 2 months. Okay, and then fixed asset turnover for Kawan Food, we can see the downtrend in the graph from 0.85 times in 2017 to 0.8 in 2018, and increased to 0.9 in 2019. As a conclusion, the company are using fixed asset better in 2019. Okay, total asset turnover. Okay, we can see in the graph that the total asset turnover ratio decreased from 2017 to 2019. And 2017, the total asset turnover ratio of Kawan Food is 0.53 times, while in 2018 is 0.53 times, and 2019 is 0.56 times. In conclusion, Kawan Food needs to use asset more efficiently to generate sales and need to increase. However, the all 3 years ratio is less than the one, then it's not good for company as the total asset are not able to produce enough revenue at the end of the year. Okay, debt ratio. As you can see in the graph, Kawan Food is experiencing almost the same in the percentage of the ratio from 15.8% in 2017 to 14.71 in 2018 and 15.44% in 2019. This indicates that the total asset exceed the total debt because the ratios of 0.4 or lower are considered better. Okay, time interested earn. As you can see in Kawan Food, the TIE ataupun time interested earn decline every year. 93 times in 2017 and 47 times in 2018 and 16.39 times in 2019. This means Kawan Food have enough cash flow to continue to invest in the business. Operating margin in the graph shows that the downtrend of operating margin from 18 to 6.6% in 2017 to 14.9 in 2018 and 7.6 in 2019. This means that Kawan Food must use the operating cost efficiently since the earning before interest and taxes is shrink. Okay, and profit margin. Kawan Food shows the downtrend of profit margin from 14.8% in 2017 and phase to 11.4% to 2018 and 5.6% in 2019. This means profit that gain from the total sales in Kawan Food is shrinks every year. Okay, basic earning power. Kawan Food shows the downtrend of basic earning power ratios from 9.9% in 2017 to 7.9% in 2008 and 4.3% in 2019. And return on asset, Kawan Food shows the downtrend also for of return on asset from 7.9% in 2017 to 6.1% in 2018 and 3.1% in 2019. Kawan Food shows the downtrend of return on equity from 9.4% in 2017 to 7.1% in 2018 and 3.7% in 2019. So stockholders expect to earn a return on their money and distribute taxes while they are doing in an accounting sense. Price to earning. The price to earning ratio is how much investors are willing to pay for our M1 of earning. In the graph, it shows decreasing from 0.41 in 2017 to 0.38 in 2018 and increasing to 0.46 in 2019. And for market per book ratio, as you can see in the graph, the market per book ratio of Kawan Food is downtrend, decreased from 3.89 times in 2017 to 2.68 times in 2018 and 1.74 times in 2019. Okay, free cash flow in Kawan Food, you can see the negative growth from RM 36 billion in 2017 to RM 29 billion in 2018 and have a positive growth in 2019, which is RM 45 billion.
Now, we will compare three companies in 2019. For liquidity ratio, current ratio is one of the liquidity ratio that measure a firm liability in paying its short-term obligation using its short-term assets such as receivable and available cash. The higher the ratio, the more the company is able to cover its short-term obligation. So, based on three companies, our financial team would recommend investing in Apollo Food Holding Berhad for many reasons. Firstly, Apollo Food Holding Berhad is stable to cover short-term obligation. We would also recommend Kawan Food Berhad and Oriental Food Berhad since the current ratio is still above 1. The quick ratio measures the dollar number of liquid assets available for each ringgit of current liabilities. It is also known as the acid test ratio or quick asset ratio. The higher the quick ratio, the better the company liquidity position. For Apollo Food Holding Berhad, it showed the highest ratio 14.11 compared to Kawan Food 2.58 and Oriental Food Industry Holding Berhad 1.55 times. Apollo Food Holding Berhad, its mean RM 14 ringgit 11 cent for each liability compared to other company. So, Apollo Food Holding Berhad has a better liquidity position. Inventory turnover is a ratio that shows the number of times a firm can sell its inventory and replace it in a given period. If the turnover rate is low, that can indicate poor sale, which will result in poor revenue. For all three companies, our calculations show that Apollo Food Holding Berhad and Kawan Food Berhad have better result in 2019, which are 12.10 and 9.03 compared with Oriental Food Industry Holding Berhad show less ratio in 2019 at 7.49. Next, day sale outstanding. The best way a company can benefit is by consistently calculating its average collection period and using this figure over time to search for trends within its own business. The average collection period may also be used to compare one company with its competitor, either individual or groups. Similar companies should be produce similar financial metrics, so the average collection period can be used as a benchmark against another company's performance. Compared to these three companies, it showed that Apollo Food Holding Berhad performed better than other company because it's only takes 57 days to transform the receivable amount into cash. Kawan Food Berhad company's average collection period was longer than Oriental Food Industry Holding Berhad. It say more than 79 days than 63 days. It will need to adopt a more aggressive collection policy to shorten that time frames. Fixed asset turnover. A higher turnover ratio is indicative of uh, greater efficiency in managing fixed asset investment, but there is not an exact number or range that dictates whether a company has been efficient at generating revenue from such investment. For this reason, it is important for analysts and investors to compare a company's most recent ratio to both its own historical ratio and ratio value for peer company and average ratio for the company industry as a whole. The fixed asset turnover ratio reveals how efficient a company is at generating sales from its existing fixed assets. Oriental Food Industry Holding Berhad is the higher ratio followed by Apollo Food Holding Berhad that show the result implies that management is using its fixed asset more effectively than Kawan Food Berhad. Total asset turnover. The higher the asset turnover ratio, the better the company is performing. Since higher ratio imply that the company is generating more revenue. The asset turnover ratio tends to be higher for a company in certain sectors than in others. These three companies have an asset turnover ratio of less than 1, which is typical for firms since these companies have large asset base. It is expected that they will slowly turn over their asset through sale. Comparing the asset turnover ratio for Oriental Food Industry Holding Berhad may provide a better estimate of which company is using asset more efficiently. From the table, Oriental Food Industry Holding Berhad turned over its asset at a faster rate than Apollo Food Holding Berhad and Kawan Food Berhad. For every in asset, Oriental Food Industry Berhad generate 1.12 in sale. Furthermore, its low turnover may also mean that the company has lacked collection method.
Okay, for the debt ratio, we can see that Apollo Food Holding Berhad is 8%, Oriental Food Industry Holding Berhad is 6.3%, and Kawan Food Berhad is 4%. So, the best company that try to overcome the debt ratio is Kawan Food, which is only 4%. For the comparison of times interest earned, okay, times interest earned ratio measures the ability of a company to pay its debt and obligation. The ratio that results from the calculation shows how many times a company can pay the interest charged. So we can say that Apollo Food Holding Berhad, they can pay 9.75 times, while Kawan Food Berhad can pay 16.39 times. The highest times interest earned is Oriental Food Industry Holding Berhad, which is 17.96 times. For the profit margin, Apollo Food Holding Berhad, the profit margin is 9.23%, and Kawan Food Berhad, the profit margin is 6%. The highest profit margin that we can see is Oriental Food Industry Holding Berhad, which is 45%. Next, we will go to the operating profit margin. Okay, we can see that the operating profit margin, the highest is Apollo Food Holding Berhad, which is 14%, followed by Kawan Food Berhad 7.6%, and Oriental Food Industry Holding Berhad, which is 6.65%. Okay, for the basic earning power, Apollo Food Holding Berhad, the basic earning power is 10%, while Kawan Food Berhad is 43%, and the highest of the basic earning power is Oriental Food Industry Holding Berhad, which is 54%. For return on asset, Apollo Food Holding Berhad is 6.54%, for the Kawan Food is 3%, and for Oriental Food Industry Holding Berhad is 5.1%. So we can see that Apollo Food Holding Berhad is the highest for the return on assets. For the return on equity, for the Apollo Food is 7.1%, uh, followed by Oracle Food Industry Holding Berhad, which is 6.9%, and Kawan Food Berhad 3.7%. So we can see that return on equity of Apollo Food Holding Berhad is the highest among other companies.
Okay, price per earning. A company which a company with a high price per earning ratio as shown in the bar graph. Kawan Food Berhad usually indicates positive future performance and investors are willing to pay more for this company's share. Apollo Food Holding and Oriental Food Industry Holding Berhad is quite good for investor and to invest in their company. Okay, low ratio less than 1 could indicate that the stock is undervalued, and high ratio greater than 1 could mean the stock is overvalued, which means that it is performed well. Okay, I can see that all the company really perform well. Okay, free cash flow. Based on the graph, we can see that the Kawan Food has the highest cash in the company, followed by Apollo Food Holding Berhad. And then the last one is Oriental Food Industry Holding Berhad. Okay, thank you. That's all from us.